There's a new tax rule that started this month, and most Australians have no idea it exists. It could put an extra $1,000 in your pocket at tax time, and you don't need a single receipt to claim it. If you've never heard of the instant $1,000 deduction, stay with me, because by the end of this video you'll know exactly how to use it, and I'll show you the exact numbers so you're not left behind like most people will be. Every year, millions of Australians either don't claim enough deductions, or they lose their receipts and give up entirely. The ATO knows this. So starting this financial year, they've introduced something new, a flat $1,000 work-related deduction you can claim automatically. No paperwork, no showbox of receipts, no stress. But here's the catch nobody's talking about. This isn't automatic money. You have to actually claim it. And depending on your situation, it might not even be your best option. So in this video, I'll break down 3 things: what this deduction actually is, who benefits most from it, and the one mistake that could cost you hundreds of dollars if you claim it without checking your number. This financial year, the government introduced an instant $1,000 work expense deduction. Instead of tracking every uniform, tool, or work-from-home expense throughout the year, you can simply claim a flat $1,000 reduction to your taxable income, no receipts required. For context, this sits alongside the tax cuts that also started July 1st this year, where the 16% tax bracket dropped to 15% for income between $18,201 and $45,000. Combined, these 2 changes mean the average Australian worker could be looking at a meaningfully bigger refund this year than last. Here's where it gets interesting. This deduction is aimed squarely at people who don't have a lot of work-related expenses to claim. Think office workers, retail staff, hospitality workers, people who don't buy tools, uniforms, or drive for work. If that's you, this is basically free money. You do nothing extra, and you get $1,000 off your taxable income. But if you're a tradie, a nurse buying your own scrubs, a teacher buying classroom supplies, or anyone with real, receipted work expenses, you need to actually add up what you spent last year before you decide. If your real expenses come to more than $1,000, taking the flat deduction could mean leaving money on the table. Quick example. Say you're on the average Australian income of around $81,000. A $1,000 deduction at your marginal tax rate could mean roughly $300 to $340 back in your pocket, depending on your bracket. But if you actually spent $1,800 on tools and equipment last year, itemizing instead could get you closer to $550 to $600 back. Here's the mistake I'm already seeing people make, assuming the $1,000 deduction stacks on top of your other claims. It doesn't. It's one or the other. You choose the flat $1,000, or you itemize your actual expenses. You can't do both. So before you lodge this year, do this. Pull up your bank statements, search for anything work-related you bought, uniforms, courses, subscriptions, home office costs, and add it up. Takes 10 minutes. If it's under $1,000, take the flat deduction and move on with your life. If it's over, itemize. This one check alone could be the difference between a $300 refund and a $600 refund, for the same amount of effort. So to recap, this financial year brought 2 real changes, a tax cut on the lowest bracket, and a new $1,000 instant deduction that most Australians haven't even heard of yet. It's not automatic, it's not always your best option, but for a huge number of people, it's genuinely free money sitting on the table. Before you lodge your tax return this year, take the 10 minutes to check your numbers against that $1,000 benchmark. It's the easiest financial decision you'll make all year. If this helped you understand your refund a little better, hit subscribe. I'm covering more of these overlooked money moves that actually affect Australians in 2026, and I don't want you to miss the next one. Thanks for watching, and I'll see you in the next video.